What's going on, guys? Give it like another few minutes and I'll get it started. If you guys have so far any questions you want me to help you guys out with, right, just put it in the comment section so I could go over it as well. But I'm pretty much probably will go over everything. Let me know if you guys can hear me okay. All right, good, good. Thanks, guys. How y'all doing? How was y'all weekend? What's up, Nuke? What's up, Patrick? Latoya? Give it like another few minutes and I'll get it started. I mean, I'm not gonna trade. Like, this is more just education. So if you guys want to trade when market open, you go right ahead. For you guys in the group, I'm gonna just focus on the educational part. So just so y'all know, this is recorded too, so y'all could always go back to it. So I won't be using any like trade ideas for this call. Like, and then after this, I will do the weekly prep for everybody. All right, so for this call, what we're going to go over is trading plan. We're going to go over psychology, what to have towards trading. Then I'm going to go over entries, stop losses, take profits, and obviously looking at reasons in the markets, right? Like go over news headlines and economic data, right? Just to give you guys a better understanding. And whatever questions that you guys need help with afterwards, then we could just do a Q&A. All right. So I'm trying not to take up most of you guys' time. Today was just a busy day for me, but yeah, now we here. So I think we should start off with, psychology, okay? Because most of us, when we're coming into trading, right, we have these expectations, like these very big aspirations and goals, right? Because we're coming in from a space of people, it's great that they influence us for money, but that's just a perception in the very beginning. And later on in life, you would know that just focusing on money so much is actually gonna fail you more than what you think. But we have to change up the way of how we view the markets, okay? Because if I mention a few names, if I mention Ray Dalio, Steve Cohen, right? Most of the top investors, hedge fund owners in the world, most people don't even know them, right? But most of us know the daily Forex trader, the 20-year-old trader. Most of us knows that. Like if you would ask that person about anything else in life, you wouldn't take any of their advice, but we take the advice that they give us in this industry, and it's not our fault, right? Because like we all fall for it. And one of the things that I struggled with was trying to understand and how to grab wisdom in this craft, right? Because we're in a society right now that don't want us to gain wisdom in anything. We want quick dopamine. We want to be able to make quick money. We want to, if I could, this is the easiest, laziest way I could be to make money is just go on my phone and buy and sell. But there's so much more to it, right? Because a lot of people is struggling in this industry, right? But the ones that we know of, obviously, in this circle of YouTube learning, a lot of people is having a harder time trying to get a grasp from it than what people really expect. And everybody is learning the same stuff and not realizing that, hey, if all of these people is learning this same video, how come nobody we see is actually being successful from it, right? So we just have to learn to break away from the herd. And we have to learn that, okay, they're telling us to stay away from this, stay away from news, stay away from data. Maybe it's because they're telling us to stay away from it because this is the actual change that people need. Because if you seek information on fundamentals, then the less dependency you're going to need on a course that just shows you candle charts, right? Because if you're seeking the intertrades because of reasons, you're not going to be following these people because they can't really explain to you how monetary policy is impacting a currency. How is these tariffs news is impacting this currency? How is economic data impacting this asset? Because they want to take you away from it because they can't explain it. They don't choose to. Why would they have to explain it if I could just, you know what I'm saying? So we all come from it. So this is why the first thing we have to do is work on that part, right? Because if we don't fully believe this is the way how I could actually trade, it's going to put you at a standstill for a very long time. You have to learn to let go. Like me, I learned everything from trading harmonic patterns to Elliott wave. I learned all of it. And I had to let all of that stuff go and learn this information from trading, from what I teach every single day, and just go full on out this way. And then I had to start that journey from learning this way again, because you're still going to fail, right? But at least you're failing, moving forward. We get forward progress confused. Most of you think if I just study this YouTube video for a long period of time, you're thinking you're moving forward, but it's kind of like you're in a treadmill, right? You're moving, but you're not going anywhere. Compared to somebody else that's outside moving, you're actually moving to another distance. So don't confuse the two. All right. So hopefully, like what we're, throughout this journey, me helping you guys is going to make a huge difference in your trading career. And most definitely, I'd rather make a difference in your life. All right. Because if you could put the effort that you do into this trading and you put that into your personal life, man, God knows how far a lot of you will go. All right. So when you're starting out this way, like, let's talk about risk management, because risk management is so important, because it doesn't matter what you learn. It doesn't matter who you learn from. It doesn't matter what you do. if you are over leveraging, if you're taking trades and you don't even know how much you're risking per trade, if you don't have a risk management plan, you are going to lose eventually. You have to have respect for this craft. All right. Just want you guys to know you have to have respect, because if you treat this craft like it's nothing, you're going to get rewarded like nothing. Right. Because you cannot be trading like every single trade you take is pure luck. This is what people do without having risk management goals, without placing stop losses, right? Without placing take profits. You're trading with luck. You're just trading hoping that you get lucky one day. And it's not going to work this way. Even the best in the industry, the best in the institutions, the top of the game, like people that owns $1 billion hedge funds, they even take losses too. So we cannot, but their losses is controlled. It's not like if they are trading a substantial amount in an account and they just lose they just lose everything. No, but we have an instance for that. So separating trading like it's gambling, you have to understand that you don't want to treat trading like you're in a casino, like you're just hitting the button every single day, right? And this is why I want you guys, we're going to talk about building a trading plan, because most of us don't come to the charts with an actual plan to attack, right? We don't have a plan to execute for the day. What is your trading plan? What are you trying to look for the day? What is the opportunity? Instead of us, we're coming into the markets like it's just a mistake. Like we just wake up like, oh, go on the chart. Hopefully I see something, enter, buy or sell. We have to stop that, right? Because the best thing that we can do is learn patience in the markets. If nothing follows your trading plan, and knowing how to stay away from the markets is the goal, because it shows that you know what you need to look for. If you come to the markets every single day and you're placing 30 trades, 40 trades in a week, and a day you're placing over 10 to 20 trades, it kind of shows that everything you see is an opportunity, right? So if you're looking at the markets, what isn't an opportunity for you? So if you can't identify what's not an opportunity, it kind of shows you don't really know what you're truly looking for, right? And that's the problem. We don't know what we're looking for that is an opportunity, right? So place of one, does that make sense, guys, before I move forward? Because I want us to start building a trading plan, and I'll go over how. Give me 1 sec. All right, cool. Makes sense. All right, good. So when you're like, I just go over how I like to look for a trading plan. Okay. And what I do, just make sure that you try to incorporate it with your personal life. Right. So you have to understand, like, each and every one of us is unique. Right. So we come from different lives. We come from different backgrounds, right? We come from different financial situations. The problem that we face is that you're trying to be exactly like somebody else, and your financial situation is not like that other person. Some people work 9-to-5 jobs, right? Some people work 12-hour shifts. Some people don't have a job and they're home all day. Some people is extremely broke. Some people have a lot of money. So our risk tolerance around money is different, right? So like an example, if you're trying to learn from somebody that's a millionaire, right, their advice is going to be different compared to the advice of somebody else that is not, that makes $500 a week, right? So you have to, when you take information from people, you have to grab what makes sense to your current lifestyle, right? Not everything, because what I go through, I'm a full day trader. So this is all I do 24/7, right? So what I like to do with my trading plan, and then take notes, because when you're trying to do something different and you're trying to okay, this is what I want to do with myself. Depending on how you treat it is going to be your outcome. Because if you treat it like I'm just watching and just like, just listen, you're not going to remember all of this. Right. And then you're just going to get motivated. And then the moment you get back to trading, you're just going to go back to doing your old habits and fucking up. So if you want to make a difference, you have to treat it seriously. You're going to have to get uncomfortable. You're going to have to take notes. I wasn't a note taker. I hated notes. I hated journaling. So I would just always open a chart, look at it, and just repeat the same cycle over and over and over until I made myself uncomfortable journaling, taking notes, taking my education seriously. That's when I started making a huge difference in my life, right? I stopped caring about money and I cared about pursuing excellence in this craft. So when you start trying to pursue excellence, you're going to start seeing yourself grow. So when I'm talking about a trading plan, what you have to ask yourself, like, number one, what sessions do you trade, right? Me, I trade London if there's economic data. So if I'm looking at London session, what pairs you think is more has more volume throughout London session, right? So is the European markets, the London session open is obviously is at 3 a.m. So I'm looking at euro and then I'm looking at the pound. Maybe sometimes I would look at gold in there, but usually if I'm up at London session, I'm focusing on economic data for the UK. That typically could give me a direction, that could give me a move in the markets, which is UK inflation, labor data, and also PMI. Retail sales, not really, because it's the UK, don't really have that much influence, but those three is the ones that I focus on, and I use that for the same for Europe. And when I'm looking for an opportunity, I'm trying to look for a trade in either the pair that is being impacted, right? So like GBP USD, GBP JPY, Euro USD, Euro JPY, or Euro pound, right? Because I know that's going to give me the best volume for that session. Same thing for New York. If I'm trading New York, I'm looking at equities, gold, and dollar pairs, right? So if I know that if Monday is like Wednesday, for example, we have US CPI coming up, I kind of know my trading plan is to trade that USD inflation data. So if people say, how do I build patience? You automatically build patience because you know what you're waiting for, right? So it comes from that perspective. So I don't care what the markets do before then, unless it's like a news headline, right? So when I'm looking at a trading plan, what session you're trading, what pairs you're looking at, right? And what are the opportunities for that day that you're willing to take a trade or look for? The same thing if there's no economic data. If I'm looking at London session, the time frame that I'm looking at is probably, I would say you could look at from 3 to, I would say like 2 to about 4:30, right? Like at least 2 to 4:30, right? That's the range, the time frame. If I'm looking for a technical trade, I would look for that. Asian session, I would recommend only looking at gold because gold gives you some good price action. This year, gold has been amazing. How many of you take advantage of gold over Asian session? So the time zones for that is Asian session is like from 9 p.m. till about 10:30. You will get the opportunity. You will see a lot of volume at those times. New York session, you want to wait until NYSE is open, right? So typically, if you're looking at equities, the best time to execute is usually after 9:30 and possibly squeezing it out until about 2 p.m. or 2:30 p.m. So if I try to, it's just natural to me. So I've been doing it for so long, but there's people that I know that takes trades and it's 6 a.m. and they're trading NASDAQ and they take a L, right? So it's like, why are you trading at that time? The stock market, the pre-market is not even open, right? So if you just learn, just that little switch could do a huge difference for you, right? Just waiting for the time where there's volume in the markets. So that's what I mean by just having a trading plan, right? So if you know what pair you're sticking with, you know the times that you're going to be on the charts. What else? If you know what economic data or news events is setting up for the day, That is like one of the key things you could focus on, right? And you're building your trading plan. So if I don't look to take trades anything around that. So if it's Monday and I know I have Australia data at Asian session and it's going to be at 9 and I have inflation, 9 p.m., I'm going to look to trade AUD at 9 p.m. Rather, if I get an opportunity or not, that's how I'm going to execute for the day. So you have a pre-plan. All right. So when it comes to like trading, so I'm going to go over entries, right? And a good one is I just look at gold. Like GJ gives like really good structure too, but I like gold. Like if I ask you guys, when you look for who do you guys learn from? Ideally, like who do you guys learn from? When it comes to entries, because like for me, I personally don't think it matters like how you guys technically look to enter a trade. I think what matters the most is understanding the direction and knowing why, right? So an example of trading gold, right? If you're trading gold, you have to know what influences gold. So we know that gold right now is a safe haven asset. So what does that mean, right? Investors tend to get into gold as a safe haven when there's market uncertainty, right? So if we have tension, wars going out, if we see risk like growth fears, recessionary fears, Trump tariffs, right? That is additional reasons to look for a direction for gold, right? So if we look at gold in a higher time frame, it's like, okay, why is gold so bullish? Like what's been going on? So what's been going on? When the Trump administration came into office, they imposed tariffs in the markets. They was going to impose tariffs to all the countries. Nobody knew how that was going to be devastating, right? But they knew that it was going to be a problem. So that ignited market fear, that ignited trade tensions, that, oh man, all these countries, now we're going to go to like trade wars with all these countries. Uncertainty. When we get market uncertainty, it gives us a direction on gold. On top of, we know that knowing that China and all these other hedge funds is buying and holding gold as well. But that's just one of the main things, because when you could understand a driver for an asset, it gives you a direction, right? Why would I want to be selling gold if I know that tariffs is coming into the markets? They're screaming recessionary fears. So it helps you with a bias. So if you understand the bias, you just have to look for a direction within that bias. So if I know that all of this is coming in place and gold is pushing lower, I'm just looking for better buy prices, or I'm looking for another reason to cause market fear so I could get back in bullish price. So where we are currently, so if you understand that part of why and what makes gold push higher, now when you can understand what makes gold go lower, so it's just going to be the opposite. So if we see that trade tensions is easing, if we see de-escalations of wars, if we see like even the dollar, right? If the Fed says that they want to hike rates, we know that a stronger dollar pushes gold lower. As of a weaker dollar pushes gold higher, right? So this is what I mean about you got to understand the pair that you're trading. It's not only just looking at a chart. If you watch and listen to Ray Dalio speak, if you listen to the owner of the head of BlackRock, if you listen to Warren Buffett, if you listen to any of these top hedge fund people, they don't mention a chart. They just talk about economic data. They talk about monetary policy. They understand what's going on with the economy. So when you understand economics, it helps you even better to determine a direction, right? You're not going to be selling equities if you know that the U.S. economy is extremely strong and positive, right? But you know if a war comes out with the U.S. is a good reason to sell equities. Does that make sense, guys? Right? So if I'm looking at the dollar And if I know that the Feds, and like we see this downside reaction, if I know that the Feds are eventually looking to cut rates, if I know that they're not likely to hike, if I see that Trump is trying to fire Jerome Powell to put somebody else in place to cut rates, if you understand that, which direction you think the markets is going to go, right? What's up, Tiara? So understanding that part is what makes a huge difference in the markets. Makes sense, guys? So that's why like understanding this stuff is extremely important. And they don't want us to learn this stuff, right? That's why, let me get this back. They try to push it away from you, because if you imagine knowing how to sell the dollar, imagine if you was able to take advantage of gold buys, right? So now I'm gonna just go over, like, when I'm looking for a trade entry, just so I don't get thrown off, take up most of your time. I mostly focus on highs and lows, right? Because before we get a break of structure, right? The way I like to back test is when I see an impulsive direction, what did the markets do before it went in that direction? What was the market's reaction before that? Typically, just get like a... So typically what I see to happen a lot is if I see consolidation, right, I see sideways price action, and then I would eventually see a breakout of structure. Usually the best source of an entry for me is just a breakout of structure. Typically you're going to see this, even if we see consolidation, right? Sideways price action, and then you get a break of structure. Typically, this is what I normally see in the markets before we get a reaction. So when I am looking at price, and this could be like, say this downward move, this could be in an hour time frame or a 30-minute. I mark off my area resistance. I mark off my area support. And what helps make the direction more, to give you more confidence in the move, is when we always could rely on reasons for that direction, right? So an example, the time, like usually I show this to make it a little easier for the eyes. So this is the 30-minute, right? We could identify this is as the 30-minute, right? We could see a area support. We could see a resistance. So I like to find the zones in the hourly time frame on the 30-minute, whatever makes the most sense, right? Like here, you could just see this area consolidation, right? So usually in a 30-minute and a 1 hour, that's what I typically look for. Usually when we get a break of structure, it tends to break out of that zone. Like I like to look at it as price is just accumulating. Price is just waiting for something to happen, right? So when you just learn to be patient at those times, just let more candle data come in place. I just work on getting better at identifying support and resistance zones, support, resistance zones, right? And understanding like how price break out those areas. So I just work on looking at that, the back test, because the reason why is like, man, how could I take advantage of that opportunity? Like, what is it? Like, how could I get in that move, right? So that's what normally I like to back test. So when I'm looking at that, and typically when you get a move in your direction, when we break resistance, right? It's just a game of probabilities. That's how you have to look, because we're never going to be 100% right. But typically when you get a break of structure, it shows you that there is a higher probability price is tending to go in that direction. But what tends to help us have more confidence, more conviction, is usually if we could have economic data or news headline when price break out within that direction. That's what could give you more confidence. But when we're looking at a technical perspective, while we breaking above structure, so let me just put this here. So I like to look at that zone, and then if I could see that this is a good area of market structure, and then let me just try to go here. what is the odds that even in the 5 minute, that's where I like to look for my entries, right? And then I'm going to put this away. Y'all remember how the 30-minute structure looked, right? And then if I go there, this is the perfect type of entries I like to look for in the 5 minute. I see the same thing, an order block, and then a break of structure, and then we're holding above resistance. Make sense? So the 30-minute, I want to see the entire market structure. I want to see consolidation. Then I'm only looking for a break of structure. So I would go down to the 5 minute just so I could actually look for my entries. But once I get my entry, it is best to go back to the 30-minute, because what most people do, because now we're going to talk about stop losses, right? So what a person would do, they would look at the 30-minute, and when they want to place a stop loss, they only want to place a stop loss based off their feelings or what. They don't even look at a stop loss sometimes. They just only think about profit. But when I recommend, when you first start trading this way, you want to put your stop loss at an area where you will be looking for the opposite trade in the other direction. Why? Because that's going to show you from a technical perspective, you was in the wrong side, because you will be looking, if I'm looking for buys, and if I go back to the 30-minute, this is where I'm going to be looking for my stop losses, right? Because remember, my entry is right here. So I'll just do this to make it a lot easier. Sam, it's in the link for the one-on-ones. I have one I signed up to. I'm gonna just do one more for this month. So it's in the link. So if I'm looking at this as my entry, my stop loss is gonna be below structure where I can be looking for sells, right? Because what most people tend to do, they will go to the 5-minute and where they're going to want to put their stop loss at this area of support. They want to put it right here below that 5-minute structure. The reason why I don't like that is because if this goes lower and break below this area structure and pushes lower, this doesn't mean you're in the wrong side of the trade. You're still in this range. Price could come anywhere within this zone and still push higher, right? So you're taking an unnecessary loss based off of emotions. Some people place stop losses just strictly emotions, like or they're over leveraging their account. So when you're placing a stop loss, give your trade breathing room to play out. Because most times, if people just do that, how many times y'all remember you enter a trade and you had a tight stop loss, it hits it, and then goes in your direction a few hours later? It happens to all of us mostly, right? So that's why I recommend, when you're placing a stop loss, don't place it on no 5-minute structure. The 5-minute structure, lower than that, when you're looking for those order blocks, the breaks of resistance and support, you're looking at market structure, right? Go to the 30-minute. And then do the same thing. You're looking at market structure on a higher time frame, and then place your stop loss below structure where you will be looking for a sell. Does that make sense? Because to me, that's the best thing that you can do. That's the best thing you can do, because now, even if price is going against you and you already have your stop loss set, before you enter a trade, you should always know how much you're going to lose for that trade, how much you're going to risk for that trade, right? I'm glad you like it, Terrence, because you have to look at it from that perspective. If you don't like the risk, then that's not the trade that you take. You have to adjust your lot size. If you know that, man, I have my stop loss below the support, but the lot size I want to use is going to blow my account, then lower the lot size, right? Remember, it's about building a brick house. You're not going to change your life with just one trade. It's not going to happen. It's not going to happen. All right. You're going to have to try to build consistency. You're never going to change your life with just one trade, right? It's going to take thousands of trades, but within that time period, you're going to build a strategy. So that's how I like to look for all my trades. There's nothing special, nothing unique, but what makes these trades a lot better is when I'm getting a break of structure when I have economic data, or a news headline, right? So say that if a war break out, and say that, oh, like right now, Russia and US, if Russia says we're not agreeing to a ceasefire, and once we start breaking above structure, and I see gold is pushing higher, I'm placing my entry, and my stop loss is below structure, right? So that's what I'm using for technicals, and that's what I'm using when there's news headlines or economic data. My entries are always the same. It's never random that I'm just entering a buy at the bottom of this candle right here. I'm just hitting a buy, right? I'm not just hitting a sell when I just see like whatever you call those, like a doji candle, right? I'm always waiting for market structure to break support or resistance. That could be yeah, BJ. I think that could definitely be a headline. Yeah, that's why I hope I don't miss it right now. But yeah, that's what's going to be on the weekly prep. Well, we could talk about that too. I hope that we do get a headline from Russia. I don't want, obviously, from just me being human, I would love for that war to end. Right, guys? Like, but when us traders, man, when there's an opportunity, shit, when those tensions actually come out, that's going to be the most easiest opportunity ever, right? That it sucks, but that's just how the markets is. Where like the market's opportunities, a lot of volume comes in from uncertainty and scarcity, right? So that's where mostly all the opportunities come from. When if they're just tensions, if the war actually goes to peace, like the markets it's like, okay, cool. You know, equities is already bullish, right? So it's not like that's going to be a long-term trade, but it's just like, it's not what you want for opportunities, you know? So that's just like another tip moving forward. For you guys, I'm going to just post in there. That's the link to the private group. And Sam, if you want to look at the 101, it's in there too. All right. Answer a few of your questions. Are you going to talk about current events and sentiment going? Yeah, I'll talk about that after. All right. So I went over stop losses. Before I move forward, does the entries make sense? And does the stop losses make sense? Before I go to take profits, just put a 1 in the chat if it makes sense. What's up, James? James is a perfect example of a guy that works full time, and he trades gold. He works full time, and he's able to trade successfully. So there's no fucking excuse for any of you guys. There's no excuse. Like BJ is a full-time dentist, busy 24/7, and he's trying to make it work. So there's no excuse. No excuse. All right. So now going to take profit. This is just for people that, because I could go over long term as well, but this is just for people that wants to start building consistency. So we're just going to go over that same trade. When I'm entering a trade, you're just, when you're in sim 2, just like sim as well, full time and trading successfully. I remember when I first started in one-on-ones with Sim, his prop firm, he don't know that much about trading, but his prop firm was damn near close to blowing it. I think he was like, $50 away or $500 away from blowing the account and then turning it positive throughout the process of our one-on-ones, right? So it's no excuse, but you have to fully believe that and trade this way, okay? Let all the old shit die and trade this way. Just build the new you. But now when we're talking about take profits, right? If you're looking to build consistency, it's not about holding trades for weeks and months, and it's not about that yet. You have to build confidence. And the only way you could build confidence, 149, right? Crazy, is to just build the trading plan execute it and win. So what I recommend in the beginning, so say that if you enter the trade, right? Our entry is right here still. Our stop loss is a below structure. The only thing I am doing is looking to the left. Where do I see price action is struggling to break, right? So I see here, this is a resistance. I look to the left. I see this is an area of resistance, right? So I don't care about my trade looking pretty. I don't care that my stop loss is bigger than my take profit. If I am looking to build consistency, right? The first thing you want to do is take profit at that first area structure to the left. That is all you have to do. Rather, if it's 15, 8, 10, 5 pips away, if you, wherever your entry is from, even if you have a late entry, you look to the left and you execute your first take profit is to that area where you see markets actually struggle. Okay. That's how you take profit. And then the second take profit, say like what I recommend in the beginning is when price hits that first zone where you look to the left, right? You make a decision. Mentally, you make a decision, or whatever decision you make, then you make it physically. But when you first hit that first take profit, you decide rather you close the full trade, you take partials, or you break even. Because at the end of the day, you want to be a trader that you could trust. Because most people, if you won't trust yourself to put all your money into an account and treat it with safety, because you think, that if I trade, I'm gonna blow this shit, right? If you go to the casino, you're gonna lose it all, right? So if you can't trust yourself, build that character within you. So when you hit that first take profit, make a decision. Because if you say like, all right, I'm gonna take partials, your second take profit is just gonna be up here at that second zone, right? Because that's at the second area where I see price is struggling to break. And even when you hit that area, make a decision. Either you're going to take full profit, you're going to break even, or you're going to take partials. The goal is just to make a decision. When you hit that zone, you should light up and say, oh shit, my trade actually played out to where I expected it to go. Don't be the person that's just like, you're unlogical. You're like, I enter a trade and then I enter it at 3,300 and my take profit is at 4,000. Like we don't know this is going to happen, right? It takes a process to know how market structure is going to play out. But say for instance, if you're in a trade, right? And you're monitoring it, the same way you look for an entry, you do the same thing as price is going up, right? Prices is rising. Then you're trying to see in the lower time frames, right? Price is just like, you're just looking to see if price is just making higher highs and higher lows, right? You're looking to see that. But the moment you see price forms a little bit of consolidation and then we break structure and you don't know when to close a trade, the moment we start breaking structure, that's your decision to close in the lower time frames, right? Because then it's a higher probability price may go a little lower. That's why, and then looking for the swing trades, that's just a different story. But just monitoring your trade as it's making higher highs or higher lows, right? Because if I'm still entering this gold trade, now I see this is an area of support. If price will break this area of support, that's a signal that price might push lower. So that's when you close the trade. Okay. And that's just like monitoring it. Does that make sense, guys? Yeah, like don't try to overcomplicate it. Like try to make your, like if you use fibs or like whatever, that's fine. It's no biggie, right? But sometimes the retest of a fib, sometimes it just doesn't happen. So that's why you could rely on just the order blocks and the break of structure. I don't care about how you like to look for entries. It's totally fine. But now we could talk about, okay, like what JP said about what like current events, right? So let me just pull this up. Yeah, I'm working on the weekly prep. So after this, I'll work on a weekly prep. So we know that Tuesday we're gonna have the Australia's Reserve Bank, right? We're gonna have that rate decision. So I know to stay away from Australia until that rate decision, right? But if I'm trading that rate decision, I see is at 12:30. I'm only looking at AUD pairs. So that's going to be an opportunity for me to want to trade. Now, London session, we have labor data for the pound. I also love trading the pound. Like this labor data is a lovely print to trade. Then also that Tuesday at 8:30, it's going to be a long day for me. We got CPI at 8:30. So I know that this is going to be definitely the right opportunity on a Tuesday. I'm glad that it's early because now if we're talking about inflation, we already see that the labor markets for the U.S., especially this month, we got that NFP print did come out lower. But what made the markets tank from that print was because the revised numbers of the NFP data coming out lower than expected. So it's showing actual fear. But then it also gives an assertive for us traders, markets, to expect the Feds to actually get into a cutting cycle. The only problem now is if we get this inflation print to come in lower than expected. Like this is the forecast though. We don't have the high and the low, and this can change. But we could already see that where's the core? Yeah, that's why I don't like this shit because they don't even have the core. It don't have core year to year. But I believe this is headline. That's why I don't really like these calendars. But usually if we get core year to year is one of the focus. We want to see when it comes to trading economic data, I might as well talk about this too. I get a question a lot. What's more important? Monthly, yearly? It's all important. You want to see all the inflationary prints go in the same direction because when you're trading economic data, it's about having an edge. So if inflation comes out lower than expected in all prints, that shows that the Feds, where their policy is at when it comes to interest rates, is working. They're seeing inflation levels come lower. So that increased the odds of an actual cut. So what this is going to do is going to cause a monetary policy reaction. So what I mean by that is that we're going to get a weaker dollar, right? Because this is going to ignite the markets to expect rate cuts. So when the Feds, the central banks is cutting rates, it allows investors to not want to buy that currency. It's not appealing. And then it also helps the equity markets rise, right? Because businesses now could go after loans. So it's best for the stock market to rise. The currencies is going to get weaker. Then vice versa. If we get higher inflation, that's going to strengthen the dollar because it's going to increase the odds that the Fed should pause rates. They're not going to hike rates, but it would give them a reason to pause rates again. So that alone would cause the dollar to gain strength and then weaken the equity markets. All right. So that's why it's important to get an edge, right? Because when you're looking at it from a monetary policy perspective, when you're trying to trade these prints, you should look at it from the eyes of a central bank member, right? If I was a central bank member and if I see that core year to year stays the same as the previous at 2.7, and then if I see that the monthly is lower for core and then headline is higher, if I look at that print, would I want to cut or pause? You probably be undecisive because it's mixed, right? It doesn't give you a bias. But if all of them comes out higher than expected and say that if yearly this 2.8 comes to 3%, what would you do as a Fed speaker? You would say, whoa, inflation rise. So there's no reason for me to cut because I want to see inflation lowering, right? So that kind of gives you an idea. Say, okay, well, this could actually strengthen the dollar. Now, when it comes to gold, so the dollar does, if inflation is lower, that would weaken the dollar and weaken the yields. Usually that could spike gold higher, right? And then vice versa. If the inflation data comes out higher than expected, that could cause the dollar and the yields to push higher. Like the US 10 yield is what I like to watch. That could also push gold lower. So that's how you could look at it from that rate decision, okay? But what matters the most with gold is typically has been tariffs and uncertainty. So I would rather trade gold based off of news headlines, but CPI is a good one to trade for that too. There are some news that are not in Forex sometimes, bro. There are some news that are not in Forex sometimes, bro. I wonder why. I don't know what news you mean. Let me know. And another opportunity, AUD wages after that. And also, AUD got a definitely a good week. And US PPI, that's another inflationary indicator that we could look at too. Okay. So like, that's just an idea. Like US retail sales, it's the same thing. If you want to have an edge when you're looking at economic data, if we see that the data is mixed, one is higher, one is lower, it doesn't give you an edge. So that means you stay away. You don't trade it. You don't try to force nothing. The only time where it's like, okay, you got to use your big brain is usually like rate decisions. You use a rate decision because typically if people see a cut, they would automatically sell. The actual number, it's already expected, right? So if it's already expected for a cut, that's not a reason to sell. You want to pay attention to the actual, it's usually an hour after an event. We're going to get the press conference right here at 1:30. The press conference is what you focus on. And I did a video for you guys on how to trade rate decisions on YouTube. So that's what you look for, just go through that video so you get a better idea on what to look for, right? Because this is what I do live with the guys every day. So now when it comes to when you're trading, right? It don't matter how much you start an account with. Just always think this way. It doesn't matter at all. One sec. If it's not a dollar amount that matters. If you can't manage $100, you're not going to manage $1,000. Can't manage 1,000, can't manage 10. If you can't manage 10, you're not going to manage 100,000. Your problem is not because you're broke. Your problem is not because you don't have enough money, right? The problem is you're not like treating it seriously. You're not treating this craft with respect, right? Because you have to learn how to keep your emotions out of trading. Where if you're trading $100, focus on risk management. Focus on like just being right. Focus on winning trades, right? I feel like something happened real quick. One sec, because I see that the market's open. Yeah, look at the dollar. That's insane. I'm afraid to see what gold do. See the dollar? That's insane. So what I'm talking about is when you're if I give you $1 million and you're trading it, odds are you're not going to trade any better, right? So you just have to look at it from that perspective. So talk about you got to work on just excellence in this craft. Work on just being right. Don't worry about money. Worry about being great as a trader from your perspective, right? From how you look at the markets. Work on building your craft. Don't worry about a dollar amount. You're not going to get it if you're focusing on money. But if you focus on excellence, if you focus on worrying about the details of your market structure, paying attention, journaling, focusing on news headlines, being patient, if you work on your trading plan to a T, the only thing that's going to happen is you're going to start building that account. You're going to start building it. And the only difference is you're just going to have to increase your lot size and trade the same way. But if you focus on money and you take a L, it's going to be very hard for you to learn from that, right? It's going to be extremely hard for you to learn from that because most people just focus on money. They don't focus on why they're losing. They don't focus on the problems that they're having, right? So that's why I tell you guys, just like learn to treat this craft with respect and just worry about journaling. Remember, build the trading plan today. Take the information. I'm going to do more videos like this to help you guys trade better. If you guys have questions right now, now is a good time to do your Q&A. Okay, we do a little bit of Q&A. What are the components of the comprehension trading plan? How can I, as a trader, ensure that my plan is aligned with my goals or risk tolerance? Well, like say for instance, like what time do you work? So if you at work during 8:30, you can't trade 8:30, right? like I always recommend, because I had a 9 to 5 job, but I was blessed enough at my job where I was able to pay attention to the news when it came out, journal it. I would go back home and practice on how I could have entered that trade. How did the data come out? Why did it push the markets in that way? Right. So a trading plan is to that perspective. Like, what kind of account are you using? Most people use prop firms. If you have $100 account, just like try to risk, like in the beginning, just try to risk between 2%, 1%, and just try to go through the week with that, right? So if I ask you, like, what do you do right and what do you do wrong as a trader? You know the things that you should be doing, and you know the things that you shouldn't, especially if you've been trading for a while. If you've been trading for more than 6 months to a year, maybe 2 years, like, you know the things that you do good and the things that you shouldn't. Most of the things that you do wrong is all emotional, right? So it's just like my goals at risk tolerance. The risk tolerance is just risk management. You know, like all I say, like 1% or 2% a trade. You know, just work on that and then work on building confidence. Because when it's time for you to increase your lot size, or if you want to build more, you're going to know. You're not going to need permission or ask somebody, oh, you think I'm ready to increase my lot size? Like, you're going to know. You know, you're going to, like, because when you start building this way, you're going to start asking better questions. You're going to start doing better things. You're going to start seeing the markets a better way, because remember, you're moving forward now. So you're not going to be stagnant. So the first is just like when you have a plan, right? What I went over earlier, just built that type of plan. What pairs you want to trade? Some people only trade gold. So if you only trade gold, what is the times that you want to look at gold? What is the data that you want to look at when you trade gold, right? So that's the stuff that you want to look for. Oh, the higher low indicator, I think it's here. Yeah, I just used this. It is, yeah, it's the Lenny Kirkue, like the MTF break of structure is right here. How do you predict CPI? Will it come out high? I want to predict. I mean, you can't predict it. You can't predict it. Like, it's no way to predict data. You don't want to predict. If it was able to predict it, we all be billionaires, right? You got to react to it as it comes out. No, like I tell people, like, breaks of structures on trades, like, because I host a group. So everybody don't trade the same pairs that I trade. And I have to go over news, explain it to you guys, educate you guys, and trade myself. So sometimes, like, when I enter trades, it's good. Sometimes I get a lot late entries because I'm going through all of this information to help you guys. When I place trades, I let you guys know when I'm in a trade. I let you guys know the pair that I'm trading, but I'm not a signal group. I want you guys, like, I never learned that way. I never learned from a signal group. I'm pretty sure fucking nobody in this industry learned and got better from a signal group. So it's not a signal group. It's a group to help you guys learn how to trade on your own. So I'll give you analysis, ideas. I'll break down what's important for the day. We trade live for the session. I'll let you guys obviously know if I'm in a trade, if I win, if I lose. I'll let you guys know everything. But I'm not going to be like 1, 2, 3, buy now. I'm not going to do that. You're not going to learn that way. I don't mind you guys being dependent, but not like that, because it's not going to help you. And I'm not allowed to do that anyway. So how can I use fundamental analysis to form my entry decision and improve the accuracy of my trades? It's just like taking it one day at a time, right? So like I said, when you look at the economic data, like, focus on CPI. It's just about moving forward, right? So if you're trading, like, Tuesday, we have US CPI. So you look at the dollar. You can look at USD JPY as a good pair. If you're looking at US CPI, so if inflation comes out higher, you look to see, look to buy USD JPY. And if it plays out, just one day at a time, right? It sells, you look to sell the dollar, then you take that sell. Even if there's no trade, right? Even if it comes out mixed or as expected and there's no trade, no edge, stay away. That's a win for the day, right? So that's what you want to focus on. All right, so that's what I was working on. That's what I recommend. And then it's just moving forward, just trading this way, moving forward. Like, I recommend to grow in a group only because, like, that's where you could get the knowledge from. Like, because I don't know if there's anywhere else where they give this knowledge, right? So it's just about taking it one day at a time, you know, trading each event. And that's how you build accuracy. When it comes to entries, because it's going to be fast, because it's new to a lot of us. Like I was just taking trades when there was no data. So the markets is not moving as quickly as you expect. So when you first trade it, you're like, how the hell can I enter these? But the more you do it, the better you would get. Sometimes I miss opportunities too. Sometimes it's just like the moves are just too fast. But there are times when they're just clear edges. The only regret is that I didn't put more. Like I didn't risk more. But it takes time. But it's just like continuing this way. Yeah, appreciate you guys. I use my Reuters. I use my Reuters account, economic calendar. Yeah, like signals, it was never like, but it just exposes how there's nothing wrong with it if it works. Like if a person gives signals and it works and it's the easy way for you to take money, shit, go figure, go for it. But if you're trying to learn and you're just like, let me just use this to help me, like, let me just like, I just want to make money quick and easy. Like this ain't it. Like that's not like how life works. It takes a little bit of effort. Do you enter immediately after economic data? Yeah, like so it's hard to explain, but like it's easy. So when economic data comes out, right, I built the bias. Like what I just did with the dollar, with inflation. So if inflation comes out higher, so like an example, like I mark off everything with these charts, right? So I mark off a range. Like I have a range for the dollar. When it comes to gold, I know market structure when it comes to gold. I see resistance, right? I look at GU, right? Because GU and EU is just going to do the opposite of the dollar. So I already, and I color coordinate it. I have it color coordinated. Red for if the data comes in red, we be looking for a weaker dollar. The data comes in green, we look for a stronger dollar, right? So when it breaks structure, right, you want to see breaks of structure. This is where you know if the data comes in red. So if inflation comes in lower than expected, this is the direction I want the markets to go. So usually what happens a lot is if the data does come out lower than expected, like inflation, we're going to, I have it wrong though. I said weaker dollar. All right. So it'll be this way, like GU, weaker dollar will be that way. EU will be that way. So if dollar breaks below support and data inflation comes out lower, then we'll know. You're going to see this candle is going to start breaking below support. We're going to see equities rise. Then most likely you're going to see GU break above resistance, EU break above resistance. And it's up to you to take the trade, right? We're going to see the yields push lower. Then we know that the data is pushing dollar lower. So if you trade EU, you have to look at market structure from your terms to see like, okay, where would I want to enter EU if we get weaker data, right? So typically it'll be a break above this resistance, right? Same thing with GU, it will break above structure because we get a weaker dollar. So that's how like you wait till after the data and then you let the price action confirm the direction. So but sometimes it depends on the print, right? Lately this year, what mattered the most is the print, if this data giving us a surprise or not. What I don't like about these websites is that it just doesn't give you the high or the low. You got to pay for that, right? So it don't give you the high expectation or the low expectation. You got to pay for it. So sometimes if data is not a surprise, you'll probably get a spike and then it recovers. But usually when it's a surprise, that will be the opportunities we look for. But you just have to build an analysis in both directions. All right. Facts learning keeps you in the markets. Exactly. The only headlines I would look for today, I would probably just is Asian session. So I would focus more on let's see what happens with China and Japan, right? Based off of headlines today. I know that I forgot the day. I put it here that I believe that Russia, Ukraine, I think it's the 15th that they're speaking, right? Yeah, it's the 15th. So this is when they meet, is on the 15th. But anything could change within this time. So I'll just focus on that. Yeah, I have it in the group. Do you know the economic indicator to the market? Do you know the economy indicator that markets is paying attention to? I don't know what that means. When it comes to economic data, Friday. Economic data is just like CPI is important. GDP, PMI, right? Those are the main three, is like in labor data. So when you're looking at labor data, right? It's going to be unemployment, jobless claims, employment data. When you're looking at GDP, that's growth. So like growth data is GDP and PMI. And when you're looking at inflation, it's like PPI, CPI is usually like the main ones. So that's usually like because those impact monetary policy. Like consumer confidence and retail sales, that's just consumers. So it's not really like how's the consumers are doing. So it really doesn't impact monetary policy as much. Can you trade? How can traders develop a mental discipline and emotional control needed to make effective trading decisions? Like I would say, it has to do with everything with your personal life. Like, are you disciplined in your personal life? Because typically, if you're not disciplined with your financial decisions, if you tell yourself like I want to go to the gym at this time and don't go, do you lie to yourself every single day, say that you're going to do something and never do it, right? So it doesn't just start in trading, it starts outside of the markets. So working on building discipline, every little day, just put a checklist on that box, like read 10 pages a day, go to the gym, eat healthy, right? Like do stuff to win for the day. The more and more that you do it, when you start making decisions in the markets, you will start tending to make better decisions for yourself, right? But if you're just all over the place in your personal life, the only thing you do right is go to work. It's not really going to help with this, So it's not just the trading that you need to fix. We got to fix our personal lives. How do you know to hold for a longer or when to scalp? Usually it's like the shift of monetary policy is a good thing, or if something new happens. Right? Like when something new happens. So like an example, if say we get recessionary fears, right? That will probably be a intraday to hold equities low, like for sales longer, because it's something new and it could actually, it causes recessionary fears. Or if a central bank is being more dovish, cutting rates, and then inflation spikes higher, now they're worried about higher inflation. Now you can see strength coming in that currency. Now you can start holding that trade a lot higher. The thing about us as humans, we look for opportunities a lot late, right? That's why they trust algorithms, because the moment we want to look for swing trades on gold buys, when you look back, we've been late for like 6 months, right? So now it's like, how can I hold swings higher now for gold? It's like the opportunities happen, during the election since December when Trump came into office and the tariff uncertainty, right? So now we're probably going to see a shift, right? If the opposite of why gold push higher happens, then we can start looking for a shift, right? But like, and the same thing you do for the dollar and equities. You just have to try to catch when something new happens that shifts monetary policy, or just wait for pullbacks for continuations. The Fed will tell you a lot of times that data is most important to them. Yeah, exactly, Wendy. Yeah, that's why I say it's important to it's boring watching these rate decisions, but they tell you everything, and none of the shit is a surprise. They tell you what they're looking for. Like they tell you why they're making those decisions. They say like, oh, this is what I want to see in order to cut rates or to hike rates. They tell you, right? But the problem is we don't watch it. People tell you to stay away from it. These people control the value of the currencies that you have. Why are you going to ignore them and just say that it's just the charts that matter, right? It doesn't make logical sense, right? They control it. They tell you if they want to make the currency stronger or weaker, right? They control the stock market. They know what makes it stronger. They know what makes it weaker, right? They turn that dial whenever they like. So you have to pay attention to them. All right, guys. Hopefully this was helpful. All right. So I'm gonna leave it at that. Again, guys, if you are interested in the private group or anything, here's the link for you guys if you want to join. If you have any questions, I would say the best way to hit me up is on Instagram. Usually where to find geopolitical news is going to be, you could get a news source or go on Twitter, like X. Usually that's good. X is a good source. Or you just have to pay for it, like News Squawk or Financial Juice, like stuff like that is good. Yeah, yes, it's gonna be available later. It's on. It's gonna be on my channel. All right, thank you guys. Hopefully this was helpful. Have a good one.